Hey guys, welcome back to another video. We're going to talk about Qualtrics today. This is a company that I have invested in from the start after their IPO. They had a blowout quarter. We're going to talk about how they did and where the stock is going. So stay tuned. All right, Qualtrics. Some of you are familiar with what they do, but many of you will not be, so we will be covering just a little bit what that company does. I've produced 2 other videos about Qualtrics, including some of the humanitarian projects that they're involved in, so please go back and watch those other 2 videos as well. Let's take a look quickly at Let's just take a quick look at the stock price and how it's been doing. Of course, they had their IPO in January. They opened up, well, their IPO price was in the 30s, but they rapidly shot up into the 40s, making it all the way up to about $57 a share at one point. That stock price has gradually declined. Now, yesterday they had their conference call to report their first quarter earnings, and it was stellar. And that is reflected in the sudden uptick in the price of Qualtrics. We're now sitting at about $41.85, which is up 23% on the day. Some of you will not be familiar with what this company does, so we'll quickly touch on that. You may have just come over to this video because you see the stock price is up so much on the day, and that is fantastic. Qualtrics is a survey company. They do surveys for 13,000 is what they advertise on their website, although the first quarter results indicate that there's even more than that. They do surveys for companies. In fact, I had a Teladoc visit the other day, and after the visit was over, in my email box was a survey, and the company that was providing that survey in behalf of Teladoc was Qualtrics. Qualtrics does surveys for lots of companies. We can see here just a small list, many of these brands of which you will be very familiar with: Adidas, JetBlue, Virgin, Ford, FedEx, 3M, Forbes, Bose, Procter & Gamble, Marriott, you name it. The list just keeps on going. They have several product lines. They don't just send surveys to customers of their customers. They also help companies with design by doing surveys that way. They, of course, have what they call the Customer XM, and that certainly is a big part of their business, but they also survey employees of their customers to find out how their employees feel about their workplace. They also help with product design and brand recognition, and they have also what they call XM services, which is their white glove implementation with expert design programs. So they are keeping a diversified income flow from their customers, and in fact they have customers who may start with just one of these, say Customer XM, and then after they see the value that's created by that, they expand that out into their other product lines. All right, that's enough for trying to review the company. Again, go back and watch my other 2 videos about this, especially the second one, which also talks about the humanitarian efforts that Qualtrics is making. All right, let's hit the first quarter results. It was a blowout quarter. The revenue, almost $240 million in revenue, which is an increase of 36% year over year. Their subscription revenue also increased significantly, up 46% year over year. It was $187 million, which you can see makes up the big bulk of their total revenue. That is fantastic because they've got subscription revenue coming in. Let's get to the net income or loss. So for the first quarter, it was almost $200 million. That is way up compared to last year where it was only $45 million. So why do I think then that they had a blowout quarter? Well, we'll get to that when we cover some of their debt. But I want to talk about their non-GAAP income or losses. So in this case, they actually were in the positive $5.3 million. That is compared to last year where they were in the negative $31.9 million for the first quarter. Now that is part of a blowout quarter. What else here? Total cash on hand, they've got almost $600 million in cash. Let's just talk about their debt for a minute. They took on a lot of debt when they were acquired by SAP as part of SAP's rules. Some of that had to do with stock-based compensation, as I understand it. And then to get out from under SAP when they went public, they also took on some debt where they signed a promissory note to pay SAP. I saw at least one of them was for $500 million promissory note with interest. So they do have a lot of debt that they've been saddled with as part of this deal with SAP. They talked in the conference call about how they expect this to eventually get back to pre-SAP levels, and then we're going to see their cash flows really doing well, I think. Then, of course, with the IPO, there can be other stock-based compensation expenses as well. We'll see that they were way up for this quarter compared to last year. There was only $12 million roughly in stock-based compensation. For the first quarter last year, almost $203 million of stock-based compensation for the first quarter this year. Now, even after all of that stock-based compensation, we see, though, that their non-GAAP operating income was in the positive, almost $7 million. That's after paying more than 10 times the amount in stock-based compensation this quarter compared to the same quarter last year. Now, let's just talk about some of the things that came out of the conference call. Those are things that aren't going to be on a slide deck, but let's talk about those. Someone from Morgan Stanley had done some math, and Qualtrics had said that they had over 1,450 customers who were spending $100,000 a year or more on their Qualtrics accounts. So when they said they had 10%, he did the math and said, well, that means that you must have roughly 14,500 customers. That's obviously more than the 13,000 they're advertising on their website. They were a little coy about answering that. They didn't want to say exactly how many customers they have. They said that they would just announce those numbers annually. But they did say, essentially, they admitted that he's doing the math mostly correctly. They talked about how they're doing internationally. So 1/3 of the new customers came from the international market. 20% of their total overall revenue is coming from international customers. They talked about the talent team at Qualtrics and some of the new talent that they've acquired. Let me just show you that. In January of this year, they announced some of the new talent. Brad Anderson came to them. He was an executive at Microsoft before his time at Qualtrics. They also hired Stephanie Barton, who came to them from VMware. She has 28 years of IT experience. They also managed to steal away Mr. Engel from AT&T. He has 25 years of experience, including companies at various stages of development, from startups to Fortune 10 companies. These are just some of the new hire acquisitions that they have managed to steal away from other companies and increase the quality of talent at their company. What is all of this new talent doing? Well, they did mention the importance of having people who are used to doing things at scale and in building new markets. So we'll see what Qualtrics has to offer in the coming year. Somebody asked about the companies who are spending $100K or more per year on Qualtrics accounts, whether those were graduating customers or whether those are new customers, and the answer is it's some of both. Now, some of these graduating customers are coming because they see the value inherent in Qualtrics. They talked about the way that when they acquire new customers, they are there to help them usually solve a short-term problem, but they are also looking at the long-term for these new customers. And they talked about their employees, or their team members who have experience in various fields and thus can communicate smartly with these new customers and help them see some of the long-term problems that Qualtrics can also solve for them. All right, so wonderful. They had a blowout first quarter. They're really pleased with it. I'm pleased with it as a stockholder. Let's talk about what the financial outlook looks like for Qualtrics. They are saying for the second quarter, they're looking to do between 240 to 242 million in revenue. That subscription revenue will continue. That is a big part of their business, looking at the $190 million range again. When we're looking at their non-GAAP margin, they're saying minus 1% to break even. For the full year, we're looking at just under $1 billion of revenue is what they anticipate, with subscription revenue still holding down the bulk of that. They still anticipate losing money for the year, with their non-GAAP operating margin being a 2 to 3% deficit. We're going to finish up just by looking at what the price targets are that people think Qualtrics should be sitting at. BMO Capital says $45 per share. Deutsche Bank says between $43 and $41 per share. Truist says $60 per share. And Raymond James is saying $45 per share. So we still have some upside from the $41 per share that we're seeing today. If we're looking at a consensus price target, we're looking just a little over $49 per share. All right, Qualtrics had a blowout quarter. I'm really happy as a shareholder. I actually purchased some shortly after the IPO in the $40 range. I purchased some more while it's been down, so that's great for me and great for all of you who have Qualtrics. If you haven't purchased Qualtrics stock, I encourage you to look into it. I'm not a financial advisor, so I won't tell you to buy it, but I am really happy with this company. I see it as a fantastic opportunity to buy in while it's really low. I don't see this sitting in the $40 range for years. I'm looking at a $160 stock in a couple of years. If you enjoyed this video, please give us a thumbs up. We would love to have it as a subscriber. The thumbs up part is really important to the YouTube algorithm in terms of who gets to see our videos. Until next time, enjoy your investing.